All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market up about what, 5 points, 6 points here as it sits, a little off its highs, a little off its lows. In fact, about 10 points off its highs right here, 4 points off its lows. Not a heck of a whole lot going on. We've had a few volume spikes come in, here to the market today, but nothing I would say is topping or bottoming in a very big way. For the challenge, we do not have any new signals. Again, we have a crossover in Procter and Gamble, a 3-7 crossover here with Procter and Gamble. We saw one of these 3 days ago and failed to materialize. We have kind of that same high consolidation risk component on it. Again, we have the same thing happening with Coca-Cola, but the consolidation risk component on them is just very high right now. So no new signal there. GOLD has an upside crossover here on it, but also not a signal. Some of the 3-7 crossovers we saw this morning, they failed to materialize. Things like Amazon, which have pulled on back to where the 3 is below the 7. Twitter, same thing. In fact, we've seen Twitter reverse and go negative. And we just continue to see this. I know there are a few stocks here and there. When I go through and we look at the crossovers, and there's 7 or 8 crossovers a day, you can always look, and there's 1 or 2 that take off, right? But the rest of them, they just do nothing. And it is just one of those where, in and of itself, 3-7 crossover, just not enough to trade. Have to have that consolidation risk component be very low. And, until then, I'm going to be patient. And I understand the, some of the feedback I get of, hey, we need more signals, and I would love it, but I have to also look and go, okay, do I want more signals or do I want the quality? And ultimately, I want the quality, and will continue to, be patient here for them to come in and let the market kind of chop around a little bit. Now that said, I don't have any personal trades on the board, option trades on the board right now. There are 2 that I'm looking at going into the close. You could argue they're a little contradictory. One is on JNJ, and this is one that doesn't have a fresh 3-7 crossover to the upside. It didn't pull back enough to get that 3-7 crossover, but this is a stock that has, the company has gone through a lot. It's been basing out down here, 128, 127. Has been building a pretty nice base. There's some decent valuation here. All the problems aren't behind them, but it does look like most of the unknown is now known. It's just one where, okay, it's struggling to get out of this 130 area, but gap down today, wasn't able to see much selling action here in it. And can I go set up a trade here to play JNJ higher? One of the reasons I say that is because JNJ options, they tend to move, and they tend to move very nicely. And when I go and I look at the option pricing right now, it's in a really nice spot. And so, I can go look at 2 weeks from now, grab maybe a 130 or 131, and if there's a nice move, those options are really going to pay off. By nice move, I'm talking up here to the 134, 135, 136 area, which is what I would expect if it breaks out of this consolidation. And, we have this kind of, retest of the low. We now have a higher low element coming in. And we've talked about, breakouts on stocks and how they kind of tend to work. We get, it can sometimes be slanted, sometimes linear like this, but we chop, top, bottom, top, bottom, top, bottom, and chop. But once we get to where, we hit the bottom and we only snap back halfway, the chance of breaking down is increased. And J&J did not break down. In fact, it was bought up aggressively with a beautiful candle and went and hit the top where we would expect to see resistance. Now it's come down and it's hit this midpoint again, and it's finding some buyers yesterday and today. And this morning it was all morning buyers, and they've just kind of backed off since. And so it's not a trade I'm going to decide on until the close. But it's an easy one from a risk-reward standpoint to where I can look at today's low, 129.32, And, I have about $1.20 risk here for it. So this is one that I'm looking at making into the close. Personally, I won't make it for the challenge simply for the, as it doesn't have a challenge signal, but a very interesting setup there on it. Now, the other setup I'm eyeing is just with the S&P. And this 3,000 level on the S&P futures has just been it's just been a magnet. Just been an absolute magnet, and we saw a little volume, high volume come in this morning that kind of semi-marked the top. I know we went and hit just a little bit higher, but I would not be surprised to see 3,000 retested here on the S&P itself, and it doesn't mean every stock goes down or something like that, but to just see, the market bleed down to that level, I would not be surprised to see. So do I want to play that? How do I want to play it? Do I want to play it with futures? Do I want to play with S&P? And I've looked at several different options here for it, and I'm kind of looking at tomorrow's options and going, how lucky do I feel? Can we get down there, by tomorrow? But I don't like the pricing. They're just not cheap enough yet. They're still pricing in, the chance for a 20-point move, which, okay, great. So, I come into next week and, this is where I start to look and go, okay, can I get a decent spread? But I may look to play those into the close and play, a little bit of action to play the market back to this 3,000 level, here into the close today. Again, I won't do either of them until much closer to the close of the market, and I may pull the trigger on both. But both of them, are they fantastic, trades in terms of probabilities and percentages? Probably not. Are they decent risk reward, with a market that just continues to chop and dice around here? Or should I say the majority of stocks continue to dice and chop around here? Yeah, it's a decent, risk reward there. And so, if I get the itch a little too much, I'll probably scratch it with one or both of those trades here going into the close. As we look at the market going into tomorrow and some of the calendar here, let me show it to you. Let's see, a little slow. There we go. But you can see there's just not a ton that's interesting tomorrow, right? I mean, we'll have the EU consumer confidence number. We'll have inflation out of Germany overnight. We'll have inflation out of Japan overnight, but just not a lot there. Very little there to drive things one way or the other. So it's most likely just going to take a more major news event, to really get a strong move here in the market. But so far, no real great sign that is happening. But rarely are there signs. But as we go into next week, we'll be getting into some of the PMI flash data, which I do think the market's going to react to. Is that will be the newest read on how manufacturing and services growth is going on out there, and basically what the market thinks of the economy and how the economy is shaping up going into earnings season. In fact, I think it's going to matter more than the October jobs report. I think it's going to matter more than any of the inflation numbers, industrial profit numbers. Why? Because it's going to be the most current data. So we'll see that on Monday. We'll see how that kind of drives things here. Whether we could see stocks that are just simply consolidating, really kind of say, all right, here we go. Let's go into trend mode here. Okay. All right. So I am in cash here for the challenge. Remaining in cash here into the close. As there are no new signals, showed some of the crossovers. I'll be back on with you here tomorrow morning, and we'll talk to you then. Take care.